Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST, where we discuss everything to do with the modern market. That is the crypto market, the NFT market, and how to make some or a lot of money on the internet. I'm your host, Bchek. I'm joined by my legendary co-host, Legendary. We're going to get into everything to do with the crypto markets and the NFT markets in just a little bit, everything that's happened over the past 48 hours over the weekend to get you up to speed. But before we do that, just a reminder, folks, that nothing that we say here is financial advice because we don't know anything for sure. The modern market is exceptionally risky. And so please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Monday. It is a new week. It's the 20th of May. We are almost, do we say we are in the summer? Is this feeling like the summer to you yet? How are you feeling as we are entering the entrance to the summer?
We're entering the entrance to the summer. I like that. The GM. Feeling a bit tired, honestly. Not because of the market, but because I spent the weekend being a degen. I said on Friday, my partner, my girlfriend, she left for a week of holiday. So I basically only slept a bit less than 10 hours over the entire weekend and spent it farming Cambria. Where you have those hourly pit fights where you wager on NPCs, and basically they run from the full hours, so from 9 a.m. to 9:20, and you have a 40 minutes break, and then you return at 10 a.m. And I did like 18 to 20 of those per day to maximize my farming output. And I even got a bit into the modern market mood because obviously this gets repetitive, right? So what I did is there's like, your regular wagers, gamblers, bettors, farmers, whatever. And every hour was like, welcome back, let's run it back. Welcome to the pit fights where we either make or lose millions. So took bits and parts of the modern market intro and played commentator that nobody wanted, that nobody paid for, that nobody wished for. But my shit talking made the farming definitely more entertaining, if not for the other people, at least for myself.
But wait, so the shit talking is to yourself? Your self commentator,
No,
or
in
can
the
anyone hear
public
you as
chat,
well?
like when
In the public chat. That's good stuff. That's good stuff. People got to appreciate that as you're doing the most repetitive types of farming. One of the things I'm thinking about, I don't know if you ever get this, Legendary, is when the sun's shining, I just start to get very reflective and I think I've got enough. I start to get very contemplative. I think I got enough money. I don't have like the most money, but I got enough money. Do I need to do these extra things? The sun's shining. What's the point? What
There's
is
an
the
easy
point?
fix to that, actually, and it's called blackout curtains.
Yeah, I know. Like, look at the setup. I mean, you wouldn't know it. I don't know if the sun's shining or not in like this little studio because I've got the window behind me, but I have to put all of the what's it called? The blinds down in order to have the lighting okay. But as soon as the show finishes, I open them and then it's like, it's a nice day. It's a nice day in May, finally in London, because the weather here is terrible all the time. But I wonder whether like that definitely affects me a little bit. I start to get a bit more. I feel like I'm taking my foot off the pedal. Have you seen Turvo? Turvo's tweeting about no screen summer. Just like we're in the summer. Because look, even today, we're about to get into the snapshot and get everyone up to speed on everything that's happening. So we will get into the headlines and all the news in just a moment. But to be honest with you, I'm kind of looking around for headlines being like, well, crypto's kind of flat. NFTs are kind of flat. Blast Gold now is a month away. I couldn't find like it feels a bit different to maybe a month ago. It does feel like the gas is a little bit off. Are you sensing that as well?
Yeah, especially if you want to discuss things of substance, right? And we're not here gossiping.
Yeah,
I feel like there's either gossip happening and no real news, or it's too many news. And now it's like Ansem and Cook
exactly. That's
taking their
exactly what I
beef
was going to
to
say.
round two. CC2, the airdrop farmer, deleted his account over the weekend and came back 4 hours later, admitting it was a beta move to delete the account. Like that's the only news that I can also find right now, and it's not really doesn't really have substance. It's not the thing that we do on the modern market, right?
Well, exactly. We're not a discussion point is not going to be to what extent should influential men like zoom in on females and put a bounty on their head. Like that's not one of our topics for conversation. But yeah, we go on anyway. We will still be able to figure out some niche, interesting things to do. And although we said, maybe broader news is a bit slower, Kobe came back yesterday, published a really long article. So we're going to spend some time going into that. I've said before I started doing any type of crypto angel investments back in December, was it last year? Maybe just a touch before. I went to his old articles and read all of them, like over and over and over again. I made like spreadsheets off the back of them, modeled things out. Super, super helpful thinker, writer. So definitely want to touch on his latest publication if you hadn't had a chance to read it already. Legendary, before I get into the snapshot and get everyone up to speed with where we are, you are finding something entertaining in the comments. Do you want to explain?
Two things. One thing is entertaining. It's Oxy saying, so a lot of pit fights out of Legendary this weekend. Bet on GFN, not financial advice because we don't know anything for sure. GFN being one of the characters. Okay. But I also saw that GFN, that Oxy somehow managed to post with his X account too in the YouTube comment section, which I can't do, but which I would love to do because then I could finally respond to those YouTube comments when Sammy isn't around for the show.
I think he's just replied in different places. So he's replied once with his X account and then once with his YouTube account. So that means he's listening on X and on YouTube at the same time, I think.
Interesting.
Does that make sense?
Yeah, I need to figure this out somehow to also show up in that comment section on the right-hand side.
Okay, love a little bit of modern market admin. Before we get into the headlines, now we're going to get into it to get you up to speed with everything. Let's get into the snapshot. As always, it's pinned up top. If you find it brings you some value today, please do give it a like. Starting with some price action. As I mentioned, fairly calm. Crypto is flat. Bitcoin is at 66.8, which is admittedly a lot higher than it was maybe last week when everyone was losing their minds. But it feels completely calm now. Again, at that range, ETH at 3.1K, Solana at 177. Two main headlines for me today. Number one, Kobe published his article on low float, high FTV tokens. The main message, although we'll dive into it a bit more, is he noted how so much more of the value in these tokens is captured on private markets instead of public, meaning anything as part of the pre-sale is where all the value is. There's very little additional value left to be had by the time these tokens come to public. Definitely want to have a bigger discussion on that as we get into the show, maybe dive into some more details. Number two, Ethereum Foundation staff disclosure of huge advisory roles at Eigenlayer raises conflict of interest concerns after Kobe's tweet. This is obviously to do with the major Ethereum restaking protocol, Eigenlayer, having a few Ethereum Foundation staff as advisors, which had not previously been disclosed. Now it sounds like they are disclosing those positions, which is obviously relevant to the extent that other people might have restaking protocols and people want to know where the foundation workers are, kind of who the foundation workers are aligned with. I want to touch on that discussion a little bit too. Getting into some broader crypto NFT price action, we've got CryptoPunks at 39.7, up a percent. Bored Apes at 13.5, Mutants at 2.5, DeGods at 1.7, down 3%. Captains at 3 ETH. Azuki's down a couple of percent at 5.1. Penguins down 4% to 11.5. Mad Lads at 65 Solana, and the Nouns winning bid was at 6.6 ETH. Legendary, that is the price action. Those are the headlines. Before we get into a bigger discussion today on the headlines, what's catching your attention price-wise?
Yeah, there's two things. If we take a look at the Mintify heat map on the ETH side of things, Mochaverse is down almost 10% over the last 24 hours. It's down almost 30% over the last 7 days. And I think a lot of that has to do a bit with the lack of clarity as to how the vesting of the tokens that will be airdropped to Mochaverse holders will look like, how the details around that will play out to be. So someone on the timeline with a thread at this price point, now very, very similarly priced to Captains in the Memeland ecosystem, with the main difference being obviously that Captains did receive the first airdrop, and Mochaverse is still pre-airdrop for the holders. So that's definitely one of the collections that caught my eye.
Yeah, I completely agree. I'm glad you brought that up. As you said, we're looking at the Mintify heat map and checking out this collection right now on video as well. We're streaming live on X and live on YouTube at the same time. I actually have a confession here. I sold my Mochaverse this morning. The reason why, similar to what you just said, it's just like the two things actually. One, the kind of lack of clarity. Two, the additional opportunity that there is elsewhere at the moment. Like, I actually wanted to get back into NFT lending on well, in a variety of places. So I wanted to get some more ETH on mainnet because so much of my ETH has now gone over to Blast. So I wanted to take advantage of some other opportunity. And you know that key question that people always ask, and I get over this very quickly now, but I could have sold my 3 mockers for as high as 15 ETH, like what, a month ago? I didn't do that. I missed that opportunity. I thought I wanted to wait for the airdrop. It was just these delays, slight lack of clarity. And the price has obviously been dropping in the meantime. And I just thought you can't let the previous price, inhibit the action now, here and now. Like if the action is correct now, based on the variety of factors that you're taking into account, you got to take the thing. You can't let the fact that it used to be 4 ETH or 5 ETH go into your brain, in my opinion. That's how I rationalize it to myself. Yes, it's not as much as it should have been on the table. Still like a winning trade for me. I think my cost basis was maybe 2.4, maybe like 5. And I've walked away with 8 something. So it's not as good as it could have been. It wasn't as much of a home run as I would have liked, but definitely took into some of those factors. Thought that might be helpful, just explaining my thinking out loud. Any reflections on that, Legendary? Have I sold the bottom? Most likely.
I think it's really healthy, and I think that's the hardest thing, right? You've seen the top, or what was the top back then, and ever since it's going downwards, like I'm not gonna wait for it to recover. I just think there's better things to do with my money, so I'm gonna take the profits and not cry after even higher profits that I could have achieved. And I think that's a very healthy thing to do. However, if we change, because I have one more thing to comment on, if we change to the Blast side of things on the Mintify heat map, there is again a lot of red on the Blast side of things, a lot of farmers exiting their positions. However, there's one thing that is basically contrasting all of the dump that we're seeing on Blast, which is Wolf Games native token, which has been migrated to Blast, is now the second largest. I mean, obviously, if you don't count for ETH, the second largest vault on Wasabi, with 4,000 ETH staked into that vault. For comparison, Park has 8,000 ETH, Juice has 520 ETH, and the price did rally massively of that. So we were sub 1 cent before the announcement. On the announcement that Wolf Game's going to migrate, we went to 1 cent, exploded to 2 cents, and now we are almost up to 3 cents.
Bloody hell. This has been an absolute cook. Just got the chart up, looking at the chart for the people who are just listening in. But if you want to see this, yeah, we're streaming live as well. Damn. So, do you remember when this happened, Legendary? This is an important point sometimes, I guess. When the first announcement happened that it was moving to Blast, and there was like this huge rip up, and everyone was like, oh, insider trading or whatever, the usual message. But I guess people then thought, oh, well, I'm not going to touch that because it's just completely ripped out of the blue, or because of the move. And then that's it. But if you look like where that would have been compared to where it is now, it's doubled from then. So at the top of that rip up, like after the announcement, I believe that was the 17th of May or so, or I'm not sure, 16th of May, but it was about 0.014. And now we've doubled up from there to 0.028. Maybe provide a little bit of context before we get into the main headlines and the bigger discussions today, Legendary. Why is, some people may not have been around in 2021 for Wolf Game when it kind of took over, why is Wolf Game able to just bridge over to Blast and immediately take that second position? Because that second position has been up for grabs for quite some time, I think. but it might be helpful for people to understand like why is it such a big deal?
Absolutely. I think a lot of people made a lot of money back in Wolf Game and have been very, very loyal to that community. It was and still is a very degen set of games that brings risk kind of on chain. It's very enjoyable. And we've seen massive, massive runs on the NFT prices. Obviously, in Wolf Game, the wolves are the best asset to have. They come in 8 different tiers. And I said it on the show last time. Back in the day, we set up a little DAO to buy one of those wolves for 500 ETH. So that was the craziness that we were talking about. And in the lowest of lows, a basic wolf went down to 0.2, 0.3-ish ETH. And now we're like back to almost 2 ETH for the floor wolves. They used to be, I think, 15 to 20 ETH at peak. So there was a lot of craze. Wool used to be well over 20 cents. But people didn't really leave, even at least the massive holders, the people like Seed Phrase, who was called in the Discord Deed Phrase because he swept the deeds, the lands in Wolf Game over and over and over again. So it has a lot of whale interest, and those whales didn't really leave and are still pretty active, which led to the fact that once wool bridging was live, basically 50%, I think, of the circulating supply got bridged pretty quickly. And the anticipation is by being able to activate that capital, activate the community, plus having an airdrop of golden sheep plus wool for everyone who wants to claim it. And I think airdrop eligibility is very, very broad with Fantasy Top, IKB, and so many, like 20 plus communities included.
Sure.
So they have a lot of capital, they get a wide distribution. Their degen nature of the game, they will run Cave Game back on Blast, fits exactly the Blast meta, and hence the expectation is they will do really, really well in terms of the gold distribution. And this is, I mean, obviously I've been holding my Wolf Game backs for quite a while, so I'm quite excited about the pump on a personal level as well. Did add that to my jackpot deck, but I do think once the NFTs will also migrate, the wolves and the sheep, we will see them on the Mintify heat map quite often. I can assume they already have pumped on the mainnet side of things. And I do think that what really plays into the hand is actually the delay of the TGE, because they announced the migration before the TGE was postponed. And when that happened, I was like, fuck, that's not really relevant, because they won't have anything or any upside on the initial TGE date, because the last, or what we deemed to be the last gold distribution back then, had already happened. But now that they have this extra month, I think that just adds more fuel to the fire for them.
Okay, that's interesting stuff. I have a follow-up question. We were speaking off air, I think on Friday or Thursday last week, I can't remember. When we found out the Wolf Game was coming back, it is obviously a game. There's like loads of different assets on mainnet. You've got land, you've got sheep, you've got wolves, you've got other things, you've got land with structures and this and that. But at its core, at the very, very beginning, you had this cave game, which actually people really, really liked, if I remember correctly. And I asked you this question. I can't remember what you said, but maybe I'd love to hear Bread's opinion on this as well, as someone who's like always playing these games on chain. Like, do you think sometimes these projects go way too big in scope and ambition when actually Cave Game was like a hit? People liked Cave Game. It was a hit. Is there not a world where you could have just kept making different iterations of Cave Game? Like in essence, what you've said, people have got excited about Cave Game coming to Blast, and it's just the same game. I guess there's going to be different, like they're going to design it differently. Maybe there'll be some Blast native designs in the cave, for example. But it's like when you play I don't play Candy Crush, but when people play Candy Crush, like it is in essence the same game, and you just like you keep leveling up, right? But at its core, it's the same game which people like. Whereas I don't know, the ambition in Wolf Game got so big so quickly, and I guess I'm looking at this 1 year price chart. I'm just sharing it as I'm speaking. Like, yes, we've gone like aggressively up most recently, but this is nowhere compared to where this token used to be. This token was up at like 20 cents which is a 10x from here. Back in, I mean, it even went as high as, this is outrageous, like 40 cents at one point. So it's crazy, crazy down. Maybe this is what happens to all tokens because of the various complications anyway. But what do you think about my general question there, Legendary, which is, if Cave Game works and is a fun game that people like, just like really, really honing in on that, then would love to hear Bread's perspective too.
Yeah, I think a couple of things on that. I think as much as I enjoyed Cave Game, realistically, the excitement more stems from the fact that people speculate that this will just be a massive, massive gold distribution.
Okay.
But of course, it's enjoyable that your button clicking is more fun if you play Cave Game than if you try to assume a delta neutral position on two per protocols, or keep playing Moon or Doom or YOLO like a madman for hours and hours. I mean, I said the same thing. Cambria, the NPC, the pit fights were actually fun enough so that I could grind them out like for 18 hours on every day on the weekend. So there is this point. To your other point, generally speaking, I do think that a lot of gaming projects have way too high ambitions and try to go for that like triple A massive open world thing. And I think Wolf Games' ambition that was too big was the complexity of the economy they wanted to design with the different districts and how land works, how resources like wool, breeding, water, everything comes together. Where if you have like a fun core game loop that you can basically recreate and adjust and tweak over time and have different sets of incentives, I do think that this could be probably a healthier approach in at least the short to midterm, until you have the experience, the size of the team, and honestly also like the time horizon to build out something that fulfills those bigger ambitions that you might have had initially.
Yeah. Okay. That makes, I think that's a lot of fair points. Definitely want to go to Bread to hear his thoughts. Bread, welcome to the stage, my friend. What are your thoughts on the kind of very expansive ambitions of certain games? Do you think sometimes it's better for them to just hone in on the thing that people like, really focus on the product market fit, or is this expansionary vision necessary to kind of develop the ecosystem?
Hey, good morning, dudes. So honestly, so you mentioned like I play a lot of these games. Actually, in Web3, I don't play a ton of games precisely for this reason, because I feel like in order to gain an edge, you have to know you have to get in really deep, right? Because there's a whole system underlying it that you have to understand. And crypto is so broadly appealing that I like the crypto is the game for me. It's not as much the game within the game. So it like so if the deeper and more expansive a ecosystem gets, I think the more intimidating it gets for new participants, myself included, right? Like I know if I dive into this thing, it's going to eat up a bunch of my time, and then I'm going to lose my edge elsewhere. And I like to kind of have the overall market view that I can have. So like it's good because it can really get people hooked into the ecosystem, and then people become whales, and they feel experts, they feel like they have an edge, and they can like expand into it. But you also cut out a huge swath of the market because people don't want to enter purely out of intimidation, right? Like I don't want to commit the time, I don't want to commit the capital, I don't want to commit the understanding, all this shit. So like yeah, we need both in the ecosystem. We need people to be able to go deep, but we also need the mobile game style thing where it's very service level, pick up and go kind of thing. But yeah, I don't have a bunch of commentary on Wolf Games specifically because I didn't spend a lot of time on it, precisely because the economy got so deep and so expensive.
Okay, that's fair. One of the questions I had though, Brad, you mentioned like crypto is the game in some way. Maybe that's the best way to describe how you play the games on chain. One thing I've noticed, I wonder if you have any thoughts on this, is in the same way that games have to have this kind of expansionary vision in order to maybe entice you with further assets and continue luring you deeper into their ecosystem. Have you noticed recently how people seem to be building their own chains? Well, as soon as they seem to hit like a dead end, it's like, okay, well, we've got a product, we've got this, we've got that. Then there'll be a token, and then even when there's the idea of a token, then it's like, right, now the vision is a chain. That seems to be like the increasingly expansionary vision. I just wondered, because we were talking about all this stuff and like expansionary visions as part of the games. Do you have any thoughts on that in particular? Like, is that
Like
basically
why
the
people
same
do
thing?
it? Yeah, I mean it's similar. I think there are actual technical reasons why people want their own chains. Half of it's valuation. People just want to make a bag, right? So there is that. Other part is like, having your own chain provides sovereignty to the team, and they are sovereignty of their block building to the team, so they can do unique things like MEV protection, stuff like that, or whatever. But half the time it's just for valuations, I would say, in this space. But yeah, I would say it's people always have to have the next thing, right? So like once you've hit a capacity within your current scope, whether if you're like a specific application, you're going to see the same thing with probably like Uniswap, right? I mean, Uniswap's pretty expansive and it's going to all chains, but people have speculated that eventually Uniswap will have its own chain because it's so expansive that like, where do you go from here when you're already the dominant DEX across the entire ecosystem? Well, like have a dominant DEX chain or some shit. It's just like the next step that once you're kind of out of ammo for your smaller scope.
Mm, okay. I think that's pretty fair. Interesting to hear your thoughts on that. Maybe that concludes our like first initial discussion on gaming and kind of expansionary visions at the moment. Let's get into the first headline. The first headline today was this new article that Kobe published on low float, high FTV tokens, with the key message being more value is captured on private markets. You'll see in the snapshot pinned up top this image which he used to express where the value really is. There's like the tip of the iceberg, which is the market cap, and the huge thing beneath, which is, wait, what the fuck? There's more coins underneath that no one can initially see, which is what people are seemingly really struggling with at the moment, or all tokens are struggling with. I've got a little summary of the article, and then maybe there's some bits and pieces I'd like to pick out after Legendary maybe comments on it to bring some interesting things to light. So I'll share the little summary first that I got off Ty Rogue, who wrote this nice summary, and then we'll get into a bit of some thoughts on it. So the article is very good, by the way. This is the summary. FTV meta has shifted since it began. Returns for public have diminished over time. Hang on, let me just share it at the same time. Returns for public have diminished over time comparing ETH, Sol, and Stark. Public returns on buying at lowest possible price available. Most upside is now for the private markets. VCs, founders benefiting the most, probably including KOLs as part of the new like angel rounds. ICOs were good and bad. ICOs allowed ETH, for example, to go from 26 mil to 350 billion. 2021 mania shifted the game and regulations, which is why now most public tokens are bad. So most seed rounds for comparable projects to ETH and Sol are over 100 million FTV now. FTVs are led due to market demand. If launches were adjusted for prices today, AVAX would launch at 15 billion instead of 2.2 billion. Low float isn't the only issue. It's that private price discovery takes place in rigged markets where VCs PvP for higher valuations. You don't need to buy these high FTV projects. Always evaluate, unlock, and valuation schedules. Meme coins are a big reason why now new tokens have to readjust fundraising and launch plans. Token buyers should identify which tokens are dislocated in value before public market and their supply and demand dynamics. Legendary. That's just some key points from the article. I'm going to pick out a few more pieces, but I just wanted to come to you first to discuss, your headline thoughts on this particular topic, your key reflections from reading the piece, because this is one of the things which seems to be both incredibly alluring to everyone in crypto, because you can create this value out of, from a product kind of out of thin air, but once you've started to deliver a product. But equally, it seems to be around people's necks at the moment because you launch at this really high price and the chart just goes down only. So what are your thoughts here?
Yeah, I think it's a very good article, and it also shows you how, I made it the title of the show, how rigged investing can be and how confusing or misleading some deal structures can be. And now that I've started to collect a bit of experience on the investment side of things, it's mad sometimes what people do to hide what is hiding under that tip of the iceberg. I've seen KOL rounds where you had a certain valuation that was put on a paper, where KOLs would buy in, and then there was a hidden airdrop for the very same. Obviously not going to name the project. There was a hidden airdrop for the very same KOLs to get that valuation down for the KOLs another 50%, but hide the discount from the others, so you can't see it on the tokenomics sheet because it's hidden as like a general airdrop bucket, and where just KOLs that invested get a special airdrop. We've seen tokens where you think there's a 12-month vesting going on, but that vesting has started 11 months ago. You're not aware of that. So there's a lot of stuff going on to sometimes make things as intransparent as possible. And that, on the opposite, makes it even more outstanding if you have a founder or a project where you can invest in and like super transparent about what's going on and not trying to somehow skew those stats. That is one part of my train of thought. The other one is to that it's basically an extension of that low float meta, which we've been discussing a lot, puts exactly that pressure on, right? You can create an investment situation where people get in early, manage to get a 20, 30, 40, 50x, be super happy around TGE, get a nice unlock. But what are you doing then realistically? You're not going to maintain that 50x unless you have that number one killer product that everyone's using. But like, we are often raising so early, that we're raising for products in pre-release stage, and then everyone's waiting for that product, whatever it is, protocol DApp layer 2 to land. And until then, people are sitting on a 50x book value gain, and they unlock more and more tokens on a daily, weekly, monthly, whatever basis, which they will ultimately end up dumping, because why wouldn't you realize your 5,000% profit on them until there's something else to do? So it is probably the biggest PvP out there is actually the crypto market and investing in that. And you like, basically when you start and you progress through the years, you slowly rise on those ranks on that information totem pole that we love to speak about on this show. But yeah, I mean, it is a very, very rigged game to cut a long story short.
You mentioned the rigged kind of market. I think it would be helpful to dive into that more specifically and share some like examples of how that works from the article. It's going to be a bit of a long read, but it's very well written. So I'm just going to take the time to share that with you because I think you'll find this helpful. It certainly was helpful to me. Then would love to go to NFT Stats to get his thoughts, bringing him in from his kind of from a numerical perspective, just trying to understand how he thinks about this type of stuff. I'm going to share the screen at the same time so you can see the article, but this is the exact part where Kobe is writing that private price discovery takes place in a rigged market and the resulting valuation is deceptive. So he says, in my mind, one of the primary issues at the heart of the low float high FTV debate lies here. The issues people have with low float or high FTV is in fact actually because the price discovery has taken place in a private market that is either rigged, delusional, or both. Allow me to introduce the phantom market. So this is what he's calling it, the phantom market. Imagine a market where one person, we will call him Kane, controls all of the supply of a new token. In this market, anybody is allowed to bid, but only Kane is allowed to sell. Kane sells some tokens to a new investor called Adam at a $50 million valuation. Adam's tokens are locked and not transferable. Kane sells more tokens to a new investor, Eve, at 300 million valuation. Eve's tokens are also locked and not transferable. Adam and Eve have a great reputation as investors, and so other investors become interested in Kane's token too. Kyle, Bob, and Taylor Swift are all bidding for the next round at 1 billion valuation. Kane decides Bob is the best investor here, so Bob buys locked tokens too. Hurt from rejection and too afraid to miss out on this fantastic new token, Kyle bids at 2.5 billion valuation and Kane sells some locked tokens to him. At this point in time, Adam's investment is up 50x. He is desperate to sell. He has been LARPing, writing Twitter threads for the past several years, and this is finally a big win for him. In fact, he would even have been happy to sell at the 1 billion valuation from the previous round. Even Eve's position is up around 10x, and she's happy to sell anywhere above a $1 billion valuation too. But since these holders are not allowed to sell, and the one guy who is allowed to sell doesn't really have many reasons he would ever want to sell lower, it's a market that is rigged to only go up. This phantom market that happens pre-token is a delusion. It is not discovering the natural price based on the dynamics of supply and demand. It is simply finding the absolute highest price that a VC investor is willing to pay. This is what happens. I'm taking a step away for a second. This is what happens when, say, one particular round closes and then they want to raise a new round at a higher valuation. Like realistically, sometimes those initial investors would be happy to buy, would be happy to sell somewhere in between, but that's they simply can't. So that's the issue. So this dynamic pushes valuations to prices that the market is unable to bear, evidenced by the graveyard of tokens from 2022 to from 2020 to 2022 that are trading significantly below their private market valuations. When Kane's token reaches Binance or Coinbase, the phantom market does not stop but evolves a little. Imagine Kane's token is now trading at a $5 billion valuation. Even Kyle, who panic bought late, is up 2x. Every single investor would now be happy to sell their tokens. Perhaps Kane has now been accused of some nefarious things behind closed doors, or some new kid has designed a better version of Kane's product. The investors, eager to sell, unable to sell their luck tokens on the market. They are not able to exit their positions until their unlocks vesting hits. So once again, these investors attempt to use private markets, sourcing OTC demand at a 60% discount to the market price. Now, the real market is priced at 5 billion, but in the phantom market, tokens are trading at 2 billion. This dislocation between the liquid token price and the locked token price is the real issue in low float coins. If the phantom market price is significantly lower than the real price for a token with a low float, the unlocks are clearly going to be exceedingly painful. On the other hand, if the phantom market price is close to the real price, then the low float and upcoming unlocks might not mean very much. So that's the key section on why the kind of price discovery is not kind of done publicly, and why he thinks the market is rigged in some respect. We've got some hands raised. Funky, Kusha, I see with your hands raised. I want to bring NFT Stats Sam into the conversation first, though. Sam, welcome to the stage, my friend. How are you doing? What are your thoughts on this kind of system that's kind of evolved, where all of this private price discovery is happening, leaving very little left to the public market?
I don't know, man. I tried to pay attention to what you were just saying, that whole thing about Adam and Eve, and I got lost. But I'll just give you a very simple example. Blur token. Like, you weren't allowed to invest in Blur token unless you had a Coinbase account. Why? I don't know why, but one thing I know is that every month that employees, insiders, investors, every month that they get their token, it gets sent to a Coinbase wallet, and then no one sees it ever again. So there's this idea that everything's public. Like, we have no idea if Pac-Man's selling. We have no idea if insiders are selling. The entire token, every single insider can do whatever they want, and these tokens all move based on information. So like, this is just like so core to the market that we have signed up for. Ironically, it's actually what people are fighting for. People are fighting for, like, I mean, some people claim they're fighting for regulation, but anytime any regulation happens, everyone talks about how evil the government is. Like, this is what people are fighting for, is for people to be able to insider trade. This is the market we sign up for. And if you look at what happened around Blur's season, like when Blast was announced, the token went from 15 cents to 35 cents before anything was made public. Mm-hmm. So like, guys, like, this is just this, like, you don't even need to go deep into Adam and Eve to see this is everywhere around you. And I think it's important when you're investing to be like, what insider information is there and what isn't there? And like, I think with things like Ethereum or Bitcoin, like, okay, I think those have reached a place where, broadly speaking, and I'm sure there are some whales that have edge over you, but like in a way that they can move the market. But we're broadly speaking, the market's pretty efficient. But like, this is all over the place. I mean, it's crazy to me that these companies are allowed to sell their, like, that the CEOs are an extremely information driven assets, like that the CEOs are allowed to buy and sell with without ever disclosing a word. And this is one of those things where I actually think the traditional system has come up with a pretty good system, like through 100 years of dealing with insider trading. It's like there are certain windows where insiders can sell. When they do it, they have to disclose it. So like the world has evolved on this, and we've decided that that's now what we want. And I think that's fine. Like that's the trade-off that we choose, because this is an industry that really focuses on just kind of like, no one get in our bags, no one tell us what to do. But these are the downsides.
Yeah, I love that point on how traditional industries have actually evolved quite usefully, as they would, to kind of take care of certain problems in the market. And I think what happens
protect the retail investor. The reason that a lot of regulation exists, as cynical as people are in this industry, like the goal is to protect retail investors from insiders, because insiders have been dumping on retail across traditional finance for the past 100 years. So they've made up rules to make it so you go to jail if you do it. Like it's just not that hard.
Yeah, I like making that point. I think sometimes when in like revolutionary fervor, when people get caught up in that, people want to like throw everything that's happened in the bin and like try to start from scratch, not recognizing that there's actually some very useful guardrails that were put in place from the previous thing. That's something I've noticed that, I don't know, seems to happen in this space quite a little bit. I appreciate those takes, Sam, a lot. Legendary, I know you want to come in on this too. Then we'll hit Funky and Kusho too.
Yeah, and NFTs, that's made also a very good point on a side note. People sending the tokens to centralized exchanges, right? You see that they go to Bybit, to the Coinbases. Nobody in this market has an incentive to be transparent about what's going on. That phantom market doesn't want to be transparent, right? You don't want to be the VC who then goes on Whales market publicly and is like, okay, I'm going to sell 70% discount from the price that the token is currently trading. And you can see, I don't know, Paradigm selling whatever tokens they have on Whales market. All of that is incentivized to happen in a very private way. There's, for example, this one guy floating around different Telegram groups who has a massive spreadsheet, bigger than Zeneca's Fantasy Top spreadsheet, with a 9-figure amount of tokens noted down from various people. There's no names on that. This guy is reputable. He's done a lot of good deals. You just see various tokens, projects, batch sizes, and discount to the public price that someone is selling via them as a middleman.
So like OTC, private, phantom market trading.
Exactly. Yeah, it's hilarious, because that shit never touches the surface of the X timeline.
Is he sharing that? Is it out and about? Oh, so he's just like compiling it privately.
Yeah, no, he's sharing that, but not publicly. So if the question would have been if I can share that publicly on screen, no.
Okay. I'd be interested to see though, because I guess the key thing which this article is suggesting that is important to figure out is what is the delta, what is the difference between that market clearing price that people are trading it in the phantom market versus the real price. I think that's
anywhere from 20 to 80% for that.
Discount.
Also, and 20 to 80% discount, also with different vesting schedules. Sometimes selling vested tokens, sometimes selling unvested tokens. So basically contractual agreements, in a sense that if I vest, say, 10,000 Atom tokens at the start of each month, you can buy my next 7 unlocks at a increasing discount from 20, 30, 40 to 50, 60%, whatever. There's a lot of interesting deal structures to be observed there.
Interesting. Okay. Definitely something to think of here. I do want to kind of maybe pivot the conversation towards the end as what's the solution for protocols trying to launch in this particular type of environment. So I want to give you a chance to have a think on that, Legendary, as we kind of pivot there, but want to go around first to Funky, then we hit Kusho. Funky, welcome to the stage, my friend. What are your thoughts on these tokens which have low float, high FTV, and how all the value is being captured privately?
GM, everyone. Yeah, great conversation. Great article. I read it this morning myself. I hope you read it on screen so people could see the picture unrelated stock photo of a white man I found by searching Tech Bro, because I started laughing when I was reading that this morning. But I think that this really underscores the sort of changing thing that we're seeing in the entire industry, which we've all been talking about on the show. We're even seeing it in our deal flow in the Kingdom, for instance, where you see these multiple raises. But what's interesting, one of the ways we access deal flow, and this is similar to what the Pudgy Penguins, I think, are trying to do with that, I think it's called Echo. We have access to 300 DAO, for instance, which kind of pools capital together. And they allow for trading inside this phantom market. So like if you miss a raise and you want to buy something at a lower valuation, you can actually have these kinds of OTC deals facilitated right inside that market. Again, which only kind of, as Kobe points out, just obfuscates the real sort of value of these things. Look at the wormhole raise, right? I think this is just a good example of you launch at this $15 billion valuation, which Legendary called out and said, this is a bridge. Like, why is it worth so much? But it's because we have these multiple rounds. And in fact, this is ultimately why David wanted to start the kingdom, because you realize the only way you're really going to capture mega upside is by getting access to deal flow and getting into these things early where you're catching all that upside before it hits the market. So it's really interesting. I hope he does complete the rest of the series, because I know he promised a second and third. So I'm sure we're going to have some great conversations around this in months to come.
Okay. Yeah. Interesting stuff. That's definitely one of the conclusions that kind of came to, which is, yeah, all of the values being captured privately. If interestingly, though, the solution's less clear, because I'm pretty sure it's not possible to go back to the ICO days either, both from a craziness and too many scams perspective, but also from a regulatory perspective. So I want to have a think about what the potential solution is there. Kusho, your hand is raised though. What are your thoughts, my friend?
GM, so I'd love to approach this from a place of inexperience. And with that, what I would like to say is, I think, once again, Kobe has put a very big spotlight on something that many people would not see otherwise. I think it's something only people who have access to deal flow and who have access to like VC kind of deals are aware of, but the general public isn't aware. And I think bringing that awareness is important and necessary, because many people are going to make plays into coins without knowing that these kinds of things have happened behind the scenes, weeks ahead of when you have like a market launch. And for me, it's part of the game. Like Modern Market Referee play on, this is our industry maturing. We always want to and ask for the industry to mature, but this is what this industry maturing looks like. And it's very sneaky, it's very tricky. Sometimes you are the one on the losing end, but it is the game. Because with the market, like something I saw in the article was that Kobe also highlighted that this is as a result of demand. The reason that we are going through these kinds of deals is because the demand for early exposure into crypto projects, into game-changing new protocols and things like that have increased. And this is what you expect to see as a result of that. You expect to see people who want to get as early exposure as possible. And you expect to see teams that want to capitalize on that exposure. Because if you are building a project, you do not want to launch thinking, oh, perhaps I would like to make money from everybody else liking what I do. It's much easier to get money from VCs, much easier to get money from angel investors than it is to launch in the hopes that your project will be good enough for everybody to love it to a point where you are very successful. So I think this is just the game. And this is what we pretty much signed up for. It's just a matter now of having the awareness of it. I think Kobe has done a good job bringing it to awareness. And it's something that I myself wasn't aware of before, because now it makes me look at project and say, yo, am I really early? And how late am I? Because it's one of the things we've talked about a lot, the information totem pole, which is like people are entering at different valuations. People are entering at 50 million, somebody's entering at 200 million, somebody's entering at 1 billion. Am I the person that's going to enter at 5 billion? Or am I the person that's going to enter at 10 million? So that's kind of what I'm thinking about it. And I think it's just a cue for everybody to do more research and more findings into the things that they're getting exposure to.
Yeah, and I think that's one of the actually concluding points as well. It's like, yes, this is part of the game, but you can actually find out a reasonable amount of this information, like if you do your own research. So I think that is definitely on the table. Look, I know there's another couple of hands raised. I want to come to you, but it might have to be on a slightly different topic, or as we tie up stuff, because we've only got 5 minutes left. The show's really rocketed by today. Want to do the Web3 roundup quickly to get you up to speed with everything else that's been happening. Want to touch on the final headline, hear Legendary's thoughts on that, and then we're going to try and cycle back if we have enough time. So bear with us. We want to get to the key information first. As I said, Web3 roundup from the snapshot, which is pinned up top. Number one, over the weekend, Pixelmon and Memeland announced a partnership. I think The farming will start on Monday, the 20th of May. That's 2024. So partnership with Stakeland from Memeland and Pixelmon. Number 2, as we already mentioned, Wolf Game completes move to Blast with 20,000 golden sheep already minted. Number 3, District 1's token Ole wins Blast Gold jackpot, but immediately dumps 20%. Next, Pumped Up Fun Exploiter was arrested in the UK, but released on free bail. You remember last week they were exploited by a former employee. Next, EtherFi announces a partnership with Athena, where restakers can earn a share of 500,000 ENA for the next week. Pons, the founder of The Plague, announces Hikeshi Manga BTC mint today. That'll be interesting to see how ordinals are coming to market. And finally, the US wins the first round of World PvP and nukes China, resulting in 67.6 ETH pulled from China. Remember, this is the on-chain political war game. Quick summary of what happened. The US won the first round and decided to nuke China. That's 67.6 ETH pulled from China. USA received 33.8 ETH. Iceland received 33.8 ETH, which was a randomly selected country. And the USA received another 61.8 ETH secondary prize. Total money going out was 400K. Fascinating game going on there in the world PvP. That's the quick roundup from the Web3 roundup from the snapshot, which is pinned up top. Final headline for today, which we want to hear from, is this news that, here we go, where are we? Where is the news? Here we go. Again, it's very much focused on ETH. Justin Drake discloses Ethereum Foundation staff ties to Eigenlayer. Eigenlayer is obviously a very, very valuable Ethereum protocol. Disclosed that 3 Ethereum Foundation staff members have formal relationships with Eigenlayer entities. 1 staff member is an early Eigenlabs investor, while 2 others are recent Eigenlayer Eigen Foundation advisors. Drake himself may receive millions of dollars in Eigen tokens vesting over 3 years as part of his advisorship, which comes with significant Eigen token incentive. This disclosure has sparked discussions about conflicts of interest within the Ethereum community. Big theme today seems to be disclosure, Legendary. Like, whose incentives are where? Are people aware about it? What do you think about this one, where some core Ethereum team people are also very much intertwined with Eigenlayer now? Does that create a big conflict of interest for you? Are you concerned? What are your thoughts? Then want to go to Akin as we close out the show.
I mean, it does to a certain extent. If we think about Vitalik being critical about what Eigenlayer is doing, or what risks, to be more precise, restaking potentially is posing. The question then also is, how do those advisor relationships look like? Is it actually advisory going on? What information is being shared? So, I mean, advisory can be a lot of things, but of course, just judging by the headline that we have, I see a lot of potential for conflict of interest, and it kind of connected to the discussion that we just had, that even if with the bigger things like ETH, and not with some altcoin launching a VC fueled pump on whatever exchange, you can see a lot of insider information being moved around. I think it was pretty obvious with the ETH pump previously to the Eigenlayer token announcement and airdrop announcement, where also some people publicly posted, oh, it's going to be a big week for ETH, who had an advisory position with one of the 2 entities. So that's probably not the smartest thing to do, but yeah.
Yeah, I think, yeah, those types of things, it's kind of juvenile, to be honest, isn't it? Like, it's not necessary to be doing that type of stuff. Look, I'm actually going to come to Akin after, because I think his take might be slightly different. Bread, I think your take might be specifically to do with this. So let's go Bread and then Akin to close the show. Bread first.
Correct. It is specific. So honestly, like, I think the headline is more sensational than it is. Like, it highlights the misconception of how this shit even operates. Like, yes, it could be a conflict of interest in that, like, Ethereum Foundation is the body that actually watches, like, or that puts forth the majority of the research for directional Ethereum stuff, but they don't have the power to do shit, right? Like, if you actually understand how these systems change, implement, move, whatever, like, what conflict of interest is there really? Are you worried that, like, yes, I guess it's going to make the participants of Ethereum probably favor Eigenlayer to, restaking protocol 752. But outside of that, like, what is the conflict of interest here?
I think
And I
that
don't
would
think
be the
people are
one
really having
problem.
that next conversation.
Yeah.
But so even so, like, why does that matter? Because everyone, like, it's not like they can specifically push people to do stuff. Like, yes, their presence has weight, but why does that matter in a decentralized ecosystem, right? Like, of course, like, I'm going to go to that Eigenlayer because it's someone that's been advised to do all this stuff, but they can also advise the second person or the third protocol, or the fourth protocol. And, like, is it just that it doesn't, like, foster a competitive environment? Because, like, I don't really see the pain here.
I wonder if it's something to do, like, and again, these analogies will not be perfect, but it's like, how people talk about the revolving door between the government and private industry. It would be like someone in the government at the, akin to the Ethereum Foundation, like the lawmaking body.
But that's what highlights the misunderstanding, right? Because in that analogy, right, you have the government that has express power to be able to dictate, like, how, like, money is funneled and how, like, rules are governed. But Ethereum Foundation has no power to do that. Like, they have weight, yes, but they have no direct power to do any of those things. They can suggest things, they can put forth research, but that stuff being implemented is not under their control.
Okay, that's a great counterpoint. I guess the thing we would need to understand more is, like, well, when you said they don't have power, but there's weight, I guess understanding what that weight is in practice more would be an interesting point for further research, I guess. Appreciate that, Take Bread. Thank you for pushing back a little bit. Let's close with Akin. Welcome to the show, my friend. Nice to see you again. What's your final take here? Kind of broader theme here has been transparency, making sure the right things are being disclosed. Does everyone know what's going on in the market when they are entering? What are your thoughts here?
Yeah, I mean, I think the reality has always been, financial markets tend to capture, and crypto markets are no different, right? As long as there's an incentive for a team to launch a project, to insiders, and the team is incentivized to do that because the value of their equity basically goes into the hundreds of millions for certain protocols overnight without delivering, you'll always have that. And I think the thing that changes that ultimately, like Sam was talking about, is increased regulatory scrutiny, right? If the cost of basically bad behavior continues to increase, then you might see people look for other means, right? I mean, if you look at most of the protocols that got fined and some of the most egregious ones, right, they got slaps on the wrist, right, and people got to kind of leave with their money, right? So I think as long as that continues, until the regulatory risk around some of these behaviors becomes tighter, I think it'll continue. I think some of the solutions are actually are apparent in some certain ways, right? So if you look at, and I think ultimately, to a large extent, one of the reasons why ETH is actually suffering, in my view, is because a lot of the ETH ecosystem is captured, right, by insiders in one way or the other, right? There's certain distribution channels where insiders, KOLs get preferences, right? And over time, what that ends up doing is destroying the fair market, and people will sort of look to go make a bag elsewhere, where perhaps the game is earlier and is not fully captured, and you can become the person, or perhaps there are like other mechanisms that make it freer. Like if you look at like Bitcoin, for example, and ordinals and runes, and as much as it's criticized, it's a fairer system, right? Because a lot of the value is available to anyone, and most of the value in those ecosystems are through airdrops or through at least mechanisms that try to reward those who have been participating, which is a very, very different approach. But I think ultimately what we'll end up having is actually fair launch. There's a lot more innovation or experimentation around fair launches on chain, where if you're providing capital, for example, like More with their AI platform, if you provide capital in form of staked ETH, right, your ETH is basically yours. You're just providing the inflation to the protocol and getting tokens in return. Anyone can do that. Like that's a fair system of initial distribution because anyone can bring ETH, VCs or non-VCs, right?
Yeah,
so it creates some level of it creates some level of equity in the ecosystem. So I think if we start seeing more and more of that happening, and they're real worthy alternatives, then I think capital will move to that direction.
Sounds interesting. I think that's a very fair take. as you say, I think people like to look for additional opportunities to try to be earlier wherever you are. And when you mention Bitcoin, Bitcoin is in an earlier situation. And then I guess the challenge is always to make sure that people always feel like they've got an opportunity. Quality of opportunity is always a thing that I think people are aspiring towards, whether that's blockchains, cities, countries. One of the main things where people want to feel like they've got a chance to improve themselves in some way. So that's a nice way to, I think, conclude for today. We hope you enjoyed the show. Thank you, as always, to my legendary co-host, Legendary, our top contributors. We have Crad, Bread, Akin, Oxy, Tiro, and Funky on stage with us. Thank you so much to everyone who joined. As always, remember, we do this every single day, Monday to Friday, 7 a.m. Eastern Time, 12 p.m. BST. Live on X, live on YouTube, uploaded to Spotify and Apple Podcasts, if that is how you consume your media. Take care. Have a wonderful day. We will see you again tomorrow. Bye-bye.